the bottom line, Steve, is this was about stay the course, dovish, don't worry about a taper as the Fed chair could possibly be, if that's what you were looking for.
I think that's a good way to put it, Scott. For sure, Powell addressed the two major issues that we're debating almost every hour on CNBC, the issue of inflation and the issue of higher yields. And he definitely sounded like somebody who is not concerned about the inflation dynamic that's coming. Let's hear what he had to say.
We've averaged less than 2% inflation for more than the last 25 years. Inflation dynamics do change over time, but they don't change on a dime. And so we don't really see how a burst of fiscal support or spending that doesn't last for many years would actually change those inflation dynamics.
Of course, the Fed sees inflation coming up or going up in the next couple of months, but doesn't see it as temporary, sees it as temporary and not as persistent. Finally, on the issue of yields, he says you got to ask why they're going up, and he's not concerned.
We look at the whole range of financial conditions, and it's very important to ask why are rates moving up. And so if you look at why they're moving up, it's to do with expectations of a return to more normal levels, more mandate consistent levels of inflation, higher growth, an opening economy. In a way, it's a statement of confidence on the part of markets that we will have a robust and ultimately complete recovery. So those are the reasons that are behind it.
Scott, you Chairman really not flinching. He's feeling, I think, the pressure of what's going on in markets right now, seeing the 10-year yield rise, hearing the talk about inflation, but he's not flinching when it comes to his plans to keep policy pretty much as it is now for the next at least several months.
You feel as though he all but shut the door, Steve, on this idea or even a fear, if there is one, even in small quarters of the market, of a taper. I mean, he used the words, and I thought this was among the most powerful things he said today in terms of market direction. Quote, the bond buying program will continue at least at the current pace. Now, I'll remind you, Steve, that the market was down pretty sharply heading into this testimony. The Nasdaq at one point had dipped by 500 points. It was a 3.5% decline. We've halved those losses. So it seems as though the market was at least comforted in some respects by what the Fed chairman had to say. And maybe that was part of it, what I read to you.
Yeah, and we've been reporting for several weeks now that the Fed is very much holding the line and not really responding to what's going on relative to markets for now. You're right, Scott. They have this phrase that they use in order to say when they'll be changing the bond purchases, substantial further progress. And he's saying we're quite a ways from substantial further progress. You might say inflation. Fed chairman's going to say we're short 10 million jobs. You might say high bond yields. Fed chairman is going to say we're short 10 million jobs. And he's concerned that people won't have a place to go back to work. And that's really the focus of the Fed, is the underperformance of the economy, not the potential or the concern about it overperforming.
Yeah, did say inflation still well below the Fed's 2% target as well. Steve, thank you.